Welcome back. Up now, we'll be having our weekly energy update with Dan McTeague, Senior Petroleum Analyst at GasWizard.ca. Take it away, Dan.
Well, good to be here, Nima. What a week it's been. We saw prices for oil and for gasoline and diesel move up and only to fall once again. And much of this really based on what I have considered to be a true head fake. Like China's playing games with oil. There, every time there's a concern about oil prices going through the roof, China pretends there's going to be some kind of a lockdown that causes prices to drop. At least that's the way, of course, some of the traders not physically involved with oil and gas tend to operate. So the headlines have China saying they're going to a major lockdown. Prices have dropped. Uh, we hear this morning, November the 11th, Friday, that in fact it won't be as big as expected. Oil prices go back up. I think it's pretty clear that sooner or later, investors, those involved with oil trades, are going to have to wake up and smell the proverbial coffee because there is a shortage. And no matter what caps are being placed on Russian oil, what sanctions are being implemented, ultimately, these will have the effect of driving up prices. So let's unparcel what's happened across the country. We've seen prices in Vancouver drop 10 cents a liter, go back up 4 cents a liter. We've seen in Alberta, Saskatchewan, Manitoba, prices moderate a little bit, down maybe 2 cents a liter. The expectation is they'll probably go up another 2 or 3 cents next week. Ontario, of course, has seen prices as high as 177, drop down to 165, now moving back up probably 3 or 4 cents a liter this week. Ditto for Quebec, which of course has seen prices, drop below $1.80, now moving back up above $1.80. And in all of this, from east to west, diesel prices have moderated dramatically, but not so in the Maritimes. So let's talk about the Atlantic because it's a very serious situation unfolding there. This is the result of years of underinvestment, refineries being told by the federal government in Canada, the U.S. government, that they're going to have a war on fossil fuels. So no one's reinvesting in refineries. And guess what? Demand is there. Unfortunately, we're not going to be able to respond to that demand because the refineries have been shut down. Philadelphia lost 2 refineries, and of course, the Come by Chance refinery in Newfoundland. Speaking of Newfoundland, interesting that the regulated prices there continue to punish consumers. There was a prediction that I made that was going to drop 3, 4, 5 cents a liter. No, the bureaucrats decided in Newfoundland to ding motorists by an increase of about 7 or 8 cents a liter, and the following day today drop it by what it should have been to begin with, a 5 cent decrease. So look, no easy way of explaining this, Nima, but the reality is that as long as we have civil servants trying to determine what the market is doing, and as long as we have a market that behaves based on algorithms and based on fake headlines run out of China, we're going to continue to have this significant disconnect between supply and demand and fundamentals. And what that means is, more dangerously, less supply and much higher prices as we head into the colder months. And that, of course, is the story of the week. Temperatures are starting to change in North America. They will do so in Europe. And that means that hold on tight, because diesel prices are going to rise. Home heating oil, furnace oil is going to rise, stove oil. And for those who believe that there's no consequence because they have propane or electricity or natural gas, those prices tend to follow very shortly thereafter. Well, that's it for this week, Nima. We'll talk to you next week. Back to you.
All right, thanks for that, Dan. Again, that was Dan McTeague, Senior Petroleum Analyst at GasWizard.ca. He's also the president of Canadians for Affordable Energy. All right, well, in other news, the Biden administration has ramped up its efforts to reduce methane emissions. It is targeting the oil and gas industry for its role in global warming. This even as President Joe Biden has pressed energy producers for more oil drilling to lower prices at the gasoline pump. At a global climate conference in Egypt on Friday, Mr. Biden announced a supplemental rule which cracks down on emissions of methane. The new Environmental Protection Agency rule follows up on a methane rule that the Democratic president announced last year. The American Exploration and Production Council represents the largest independent oil and gas companies in the U.S., and it says that it appreciates the changes made by the EPA. Well, this comes as German lawmakers have approved a plan to keep the country's 3 remaining nuclear plants until mid-April. Now, that will extend their life beyond the originally planned shutoff at the end of this year. The lower house of parliament voted to approve the extension on Friday. The vote came after Chancellor Olaf Scholz last month ordered ministers to prepare the plan. Mr. Scholz put his foot down on an issue that had divided his three-party government. The decision comes as Germany tries to prevent a possible energy crunch this winter due to cuts in fuel supplies from Russia over the war in Ukraine. All right, we'll be right back after the break. And when we return, we're going to be taking a look at the latest big moves in the world of cryptocurrencies amid the collapse of FTX trading. So stay tuned. An interview with Catherine Murray up next.